This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Kickoff, Alcoa's earnings numbers miss big, starting what many think will be one of the ugliest earnings seasons in years.
Chaos on Capitol Hill. Without warning, Kevin McCarthy drops out of the speaker's race, raising questions about what happens next, just as Congress faces tough budget deadlines.
And tech tie-up are two well-known companies working on one of the biggest takeovers in tech industry history. All that and more tonight on Nightly Business Report for Thursday, October 8th.
Good evening, everybody, and welcome. A disappointing start to earnings season. Alcoa, which unofficially kicked off third quarter results, reported a big earnings and revenue miss. The former Dow component earned 7 cents a share. Expectations were for 14 cents. Revenue came in around $5.5 billion, down more than 10% from a year ago, hurt by sliding aluminum prices. Shares of Alcoa dropped initially on that report in after-hours trading. During the regular session, it finished slightly higher. Despite the disappointing quarter, CEO Klaus Kleinfeld called his company resilient.
If you look at what's been going on in the economy, you see it's a lot of volatility that's in there. I mean, from commodity prices to currencies to worries over China, emerging economies, interest rates. And if you look at that and then reflect it to our quarter, I think you see quite a bit of resilience in there.
Morgan Brennan has more on Alcoa's quarterly results.
Alcoa earnings and revenue missing expectations, with the biggest drag coming from its primary metals segment, or the aluminum giant's smelting and refining operations. The company reporting a $59 million loss in that division as aluminum prices have plunged 27% this year. As we've seen throughout the commodity complex, it is a story of oversupply exacerbated by the slowdown in China, which is the largest consumer of aluminum and many other industrial metals. Still, the company reiterating its forecast for global aluminum demand to increase 6.5% this year, and also projecting a global aluminum deficit in 2016. In terms of bright spots, revenue in Alcoa's manufactured parts businesses continue to grow. Those are the midstream and downstream businesses that Alcoa plans to split into a separate company late next year. But again, this quarter, it was all about weak commodity prices dragging down earnings in what could be a potential harbinger for other industrial companies that will report in coming weeks. For Nightly Business Report, Morgan Brennan.
Well, despite the disappointing start to earnings season and analyst expectations for a slightly negative quarter overall, our guest tonight is optimistic that earnings will surprise to the upside and will be flat. Flat is the new up, I guess. Andrew Berkeley, a portfolio strategist at Oppenheimer and Company. Andrew, welcome. So why do you think that the numbers will be better than the negative 3.5% that is kind of the consensus forecast?
Hi, Tyler. Yeah, how you doing? So, yeah, if you look at the overall aggregates, as you mentioned, down a little bit in terms of the consensus forecast, we think that'll, surprise on the upside, probably be somewhere around flat, really for two reasons. One is that there's really just a chronic underestimation by analysts. They're usually too pessimistic by somewhere between 3 to 5%. So if we assume 3.5% is right around the median of that, that'll bring us right to about flat earnings. The second is we just don't see it's consistent with what we're seeing in the overall economy. Where nominal GDP is still growing, somewhere close to about 4%. So that's really not consistent with down earnings. But it's really at the sector level. When you get under that flat, you'll see a very big dispersion between sectors.
Yeah, and let's talk a little bit about that, Andrew, if you would, because you kind of divided up into two camps, those that have commodity exposure and perhaps more international exposure, and those that do not.
Yeah, I think those are going to be the two big factors. And, Alcoa is a very good example of a company that has a lot of international exposure and a lot of commodity exposure with very disappointing earnings. And I think that's going to be a consistent theme, which is really one that we've seen a lot throughout 2015, which is more companies that have more domestic exposure, less commodity exposure. Those are the ones that have been delivering on their earnings. Those companies that are really dependent on commodity prices, which have been under pressure all year, those have really been the losers throughout the earnings season. So I think that's going to play out yet again in Q3. Now, that may start to change as we get into Q4 and in 2016 as the dollar has started to stabilize a little bit, oil prices have started to stabilize. But for the current quarter, that's still going to be a big factor.
That was kind of what I was going to ask you. Is the worst behind us? In other words, when we start having different comparisons, fourth quarter against last year's fourth quarter, first against this year's first quarter. Is the worst behind us in terms of the commodity price slide, the energy issue, the dollar, and so forth?
Yeah, I think so. I mean, and if you look at where oil prices were in the fourth quarter of last year compared to the fourth quarter, currently in October, they'd already started to come down a bit. The dollar's already been strong. And the other point to make is that companies have had longer to adapt to those two big themes, right? This is something we've been in here for a number of years now. So companies can no longer say they're surprised, really, the dollar's been strong, or that energy prices have been weak.
So 2 cheers for earnings this time around. Andrew Berkeley, thanks very much. Andrew is with Oppenheimer and Company.
Stocks picked up steam in today's session after the Federal Reserve released the minutes from its latest meeting. But we'll have more on that in just a moment for you. On Wall Street, the Dow rose 138 points to close at 17,050, its first close above 17,000 since August. The Nasdaq was 19 points higher, and the S&P 500 notched a 17-point gain. Domestic crude rallied, closing nearly 3.5% higher at $49.43 a barrel.
And as Sue just mentioned, at the Federal Reserve's last meeting, policymakers said the time for raising interest rates was near, but the group thought it would be best to wait. The central bankers were concerned about global developments and wanted more evidence of the impact of the global slowdown on the U.S. economy. At that September meeting, the Fed did surprise many by deciding to keep interest rates unchanged.
The number of Americans filing new applications for jobless benefits fell to a near 42-year low last week. The Labor Department reports that claims for unemployment benefits dropped 13,000 to a seasonally adjusted 263,000. That's the 31st straight week that claims remained below the key 300,000 mark.
A stunner on Capitol Hill. House Majority Leader Kevin McCarthy, who was considered the frontrunner to become the next House Speaker, has dropped out of the race.
The one thing I've always said to earn this majority, we're servants. We should put this conference first. And I think there's something to be said for us to unite. We probably need a fresh face. I'll stay on as majority leader. But the one thing I found in talking to everybody, if we are going to unite and be strong, we need a new face to help do that.
Separately, Democratic presidential candidate Hillary Clinton laid out her plan to broaden Wall Street regulations. John Harwood has been following developments on both of those items. And let's start, John, with Kevin McCarthy dropping out of the race. How does this cloud the picture for some, or does it clarify it, for some of the big issues that Congress has to tackle over the next few weeks, like the debt ceiling?
Well, it might clarify it in the short term, Tyler, because John Boehner is likely to stay on, given the fact that he said he's going to stay in the job until there's a successor. We don't have one yet, so we don't know how long that's going to be. It could even stretch to the end of the year, when we've got the debt limit is going to be ripening in November, for example. So it is possible that the what looks like chaos and turbulence could actually protect the status quo for a while John Boehner stays on.
You know, there's been reports that Mr. Boehner reached out to Paul Ryan today, and apparently he said no, but, you know, this is an ongoing kind of saga that's developing on the Hill. So what happens next?
I think a lot of people, Sue, are going to be calling on Paul Ryan because he does seem to be the one figure that everyone agrees has the capacity to get the votes to become the speaker, and also is somebody who has got a track record of getting some things done. He did that budget deal with Patty Murray last year, but Paul Ryan has said publicly he does not want that job, and that leaves us in a situation where people like Jeb Hensarling, Jason Chaffetz, who's already in the race, Tom Cole of Oklahoma, Peter Roskam of Illinois. All these names are being thrown about. Nobody's got the votes as of now.
Getting something done with Democrat Patty Murray is not exactly the way to endear yourself with the Freedom Caucus. Let's move on now to Hillary Clinton, about as far away from the Freedom Caucus as you can get, and her plans to tighten regulation on Wall Street. What did she propose today?
Well, remember, Tyler, there's the Democratic debate, the first of the primary season next Tuesday, and Hillary Clinton facing pressure from her left on Wall Street issues from Bernie Sanders, from Martin O'Malley, came out with a proposal, only released on paper. She didn't want to draw too much attention to it, to enact some new regulatory steps. First of all, she is proposing a tax on high-frequency trading, which has been associated with the flash crash and some other difficulties on Wall Street. She thinks that would be a deterrent. She's proposing to close a loophole in the Volcker rule that allows banks, government-guaranteed banks, to do some business now through hedge funds. She would close that loophole. She would revive the swaps push-out rule that was struck down in budget legislation last year. And finally, she says she would reorient prosecution and regulation of Wall Street so that individual executives would be more likely to be prosecuted than they have been so far. After all, nobody from Wall Street went to jail as a result of the financial crisis.
All right, John, thank you very much. John Harwood on the North Lawn of the White House.
Strike averted. The United Auto Workers and Fiat Chrysler reached a tentative new deal late last night. The agreement must now be ratified by the automaker's 40,000 union workers. Neither the union nor the company disclosed details, but the union is reported to have said that it won, quote, significant gains.
The CEO of Volkswagen's America unit apologized today on Capitol Hill. During a congressional hearing, Michael Horn expressed remorse over the automaker's skirting of federal emission standards. But as Eamon Javers reports, lawmakers were looking for more.
The whole truth and nothing but the truth.
It was a brutal day on Capitol Hill for Michael Horn, the president and CEO of Volkswagen Group of America, as he testified before a congressional panel determined to learn just how his company cheated on emissions testing.
And we are determined to make things right. This includes accepting the consequences of our acts, providing a remedy, and beginning to restore the trust of our customers, dealerships, employees, the regulators, and the American public.
But Horn could not answer many questions and appeared flustered at times, saying he couldn't understand questions or was distracted by photographers taking his picture. Members of Congress did not seem willing to cut him any slack.
VW has betrayed a nation of regulators, loyalists, suppliers, and innocent customers. It's time to clean it up or get off the road.
Legislators did not get clear answers to just what Volkswagen plans to do to support car owners and dealers, or exactly how much the company expects to pay in fines. But Horn did give a timeline for how long fixing the hundreds of thousands of flawed cars on American roads will take.
You are certain the remedy will end up being a multi-year approach?
Yes, if you look at if you look alone at 430,000 cars, and the repairs might take 5 to 10 hours even in order to fix this, technical fixes. And if you look at your recall history in this market, also with NHTSA, then these actions take 1-2 years minimum.
Horn did say that the company is withdrawing its request for certification of certain model year 2016 vehicles. That move might leave some American dealers without enough product to sell and stuck with inventory that some customers may not want to buy. For Nightly Business Report, I'm Eamon Javers in Washington.
Still ahead, why two well-known tech companies may want to get together in what would be one of the biggest tech industry takeovers ever. Dell Computer is reportedly in talks to acquire EMC. Dell is privately held, but shares of EMC moved higher on the reports, which, if true, the deal would be the biggest tech tie-up ever. Josh Lipton takes a look now at why these two companies would want to get together.
Michael Dell has been relatively quiet since he took his company private 2 years ago, but now he could be making a big move. CNBC reports that Dell is in talks to buy EMC for more than $27 a share. The deal makes strategic sense for Dell. A combination with EMC could strengthen its market share in a number of areas. One would be in the enterprise storage business. That's a $36 billion market, according to IDC, where the big players include companies like HP and NetApp. A merger would also give Dell access to EMC's security business, where it would go head-to-head with giants like Intel and Cisco. And finally, reports suggest that a merger would include a controlling stake in EMC's software company, VMware. Its technology allows data centers to run more efficiently. So what's the benefit to EMC? Well, such a deal could put an end to its ongoing battle with activist investor Elliott Management, which has been demanding that the company boost its stock price. Analysts say EMC needs to act.
Elliott, in our view, could do a public proxy battle if EMC doesn't act, They need to make a move in the next few weeks, and that's where our time is ticking for them to finally make a strategic move one way or another.
There is no shortage of doubt about whether such a deal actually does get done. The merger would be costly and hard to finance. Still, Brent Bracelin, an analyst at Pacific Crest, says investors need to be aware of a broader trend. There is a wave of consolidation coming to the IT hardware space, he says, meaning companies selling servers, storage, and networking equipment. Many old guard tech companies still generate a lot of cash, but their stock prices have come under pressure because of the threat from newer cloud computing technologies. That means the economics of consolidation in the IT hardware market could now make a lot more sense. For Nightly Business Report, I'm Josh Lipton in San Francisco.
Streaming just got a little bit more expensive, and that is where we begin tonight's market focus. Netflix upping the cost of its basic monthly service by $1. The new price of $9.99 will go into effect in November for new customers. Current subscribers won't have to pay more for a year. Shares were more than 6% higher. They closed at $114.93. Domino's posting results that missed on both the top and bottom lines. The pizza company pointed to the stronger dollar for the disappointing numbers. Shares fell about 5% to $102.64. And Costco says its same-store sales were flat last month, but that was better than the expected decrease. Shares were 2.5% higher today to $151.66.
Gap reporting that its same-store sales were down 1% in September, driven by a big decline in its Banana Republic division. Shares slipped in initial after-hours trading. During the regular session, the stock was up nearly 2% to $28.95. Shares of Polycom rose after the hedge fund Elliott Management disclosed a more than 6% stake in that firm. Elliott is urging the video conferencing equipment maker to consider a merger. Polycom rose nearly 17% to $13.35.
Americans are expected to spend this holiday season. The National Retail Federation released its forecast today, but as Courtney Reagan reports, it's not necessarily how much consumers spend, but what they'll be buying that's key.
With the Christmas countdown in full swing, holiday sales forecasters are placing their bets. The National Retail Federation expects consumers to spend over $630 billion in November and December, an increase of more than 3.5% over last year. Though the increase is slightly weaker than last year's rate, the industry group says it reflects the economic tailwinds consumers are feeling.
We know gas prices are at historic lows. We know home values are improving. We've seen some momentum in consumer spending throughout the course of the year. We think as we get into the holiday season, we expect it'll be promotional. We think there are going to be a lot of great exclusive deals and that consumers are going to feel the positive momentum and are going to spend into the holidays.
But where and when consumers will spend their hard-earned cash is key. It's no secret retailers will have a flurry of online deals during the key Black Friday week through Cyber Monday. But PwC's Holiday Outlook survey says the majority of shoppers still prefer the physical store. Department stores like Macy's, JCPenney, and Nordstrom are expected to be top shopping destinations, followed by mass merchants like Walmart and Target. When it comes to what drives a purchase, price, promotions, and the quality of merchandise top the list.
The competition for consumer dollars between retailers only gets more intense with every passing holiday season. Plus, the millennial shopper's desire to give and receive experience-based gifts is giving physical gift giving a run for its money.
They're very interested in connecting with friends and family, much more so than trading traditional gifts. So we think it's really about dinner out, perhaps going to a ball game or some entertainment venue together.
As a result, restaurants, hotels, and airlines could look forward to a Christmas bonus as the 18 to 34-year-old shopper plans to spend slightly more on travel, dining out, and self-gifting than on gifts for others. But retailers aren't giving up on those buying physical gifts. Retailers are hiring over 700,000 seasonal workers in stores and e-commerce distribution centers to compete on customer service and shoppers' most expected perk, free shipping. A small price to pay when nearly 20% of the industry's annual sales are at stake. For Nightly Business Report, I'm Courtney Reagan in New York.
Retailers are hoping that low gas prices will help sales. But so far, that has been an economic mystery. Gas prices are falling, but Americans don't seem to be spending the savings. Or are they? Steve Leisman may have just cracked the case.
Call it the curious case of the vanished gas savings. Americans spend less with every filler up, but sales at the mall show little gain, leading to the question, what happened to the extra gas money?
I'm banking it to save it for when the gas goes up.
It goes in one pocket and out the other.
Along comes the J.P. Morgan Chase Institute, a new research outfit with terabytes of real spending data and a groundbreaking report. They say they found the money. Like a good Sherlock Holmes mystery, it's right under our noses, or rather, at the diner, the grocery store, and at the movie theater.
They spend it on restaurants, 18%. They spend it on groceries, that's another 10%. But you also saw boosts to other retail categories, department stores, entertainment, electronics and appliances.
The not-for-profit institute set up by the well-known bank has access, anonymously, to the spending of 25 million Chase credit and debit card holders around the nation. A big finding of the new study, most economists thought that Americans spent just 45 cents of every dollar saved at the pump. J.P. Morgan's findings, it's nearly double that.
What we find by looking at these 25 million counts is that contrary to what conventional wisdom has been saying for the last while, is in this last period of very steep gas price declines, people are spending most of what they save at the pump. They're spending 80% of what they spend on the pump.
It helps with my grocery bills.
It goes, on meals.
To be sure, some of the increased spending does show up in the official data, but not all of it. With its reams of real spending data, J.P. Morgan makes a compelling case. Americans are spending the savings at the gas pump. Mystery solved, case closed. For Nightly Business Report, I'm Steve Leisman in Washington.
Coming up, what experts say is the best thing that's ever happened to small business.
Here's what to watch for tomorrow. A read and a report on import-export prices, an important read on inflation. Another economic indicator, wholesale trade numbers are out. And we'll hear New York Fed President Bill Dudley. And that is what to watch for Friday.
Bill Gross is suing PIMCO, the company he left last year, saying he was driven out of the bond fund giant. Gross, who co-founded PIMCO, is seeking $200 million in damages, accusing current and former executives at the firm of leaking disparaging information about him to the media to engineer his ouster. He alleges breach of contract. PIMCO says the suit is without legal merit.
In the final part of our series on mom and pop shops who are going digital, tonight we meet a jeweler who is taking her traditional business into the 21st century. Sharon Epperson has her story.
Fourth-generation jeweler Miriam Gamushian still makes jewelry the way it's been done for centuries, by hand.
Our business is incredibly old-fashioned.
But our company and the industry has come a long way from doing business the old-fashioned way.
Before, things didn't happen so fast. Before, you didn't have the luxury of speed. So if a customer in California wanted to see something, it could take up to 2 weeks for them to actually get the piece, then show it to the customer, and then, by the time the whole business was done from A to Z, it could be a month. Today, I can do that in 24 hours.
Gamushian says speed is key because consumers want instant gratification, and now clients from all over the world can see her pieces immediately through social media.
A woman can relate when you see a picture of a ring on a finger or a necklace or an earring, and this is something that we're very, we like to show how it's worn. In real time, we snap pictures. And so women do see that and they want to try it on. It's a lifestyle.
Social media is the best thing that ever happened to small business because it used to be you had to get through these gatekeepers to get to people. Now, if somebody's on social media, you can get to them. But the thing about it is it's all about your Googleability of your business and your brand.
Gamushian knows her brand well. High-end jewelry designed by women for women, and she targets her audience where they spend much of their time, on Instagram.
I was so surprised that women, literally, I would say definitely my age and up, had checked me out. So they knew all about me, they knew the name of my collections, they knew some of the stores, they knew where I'd appeared, and I was like, wow, I mean, these women really did their homework. And I'm like, how'd you know about it? He goes, well, I checked you out.
Experts say there may be no need for small business owners to use several types of social media.
Use one social media site well. You don't need to be doing Facebook, Pinterest, Google+, Facebook all at the same time. You need to be doing one well, and it should be the one where your best target customer is spending the majority of their time online.
Still, even keeping it simple can become overwhelming as business grows.
The thing with technology, even though it's easy, in a way, I think you do work much more because you're able to reach so many more people within the same day.
But there is one important factor that Gamushin says makes juggling it all manageable.
I love it. Mwah. I love what I do. I'm passionate about my industry and all our babies that we create.
For Nightly Business Report, I'm Sharon Epperson.
That's my dream job. Work with jewelry.
Work with jewelry.
Yeah, she has beautiful stuff.
She had beautiful items, absolutely.
Heavy side.
I'll get you some for Christmas.
No, you will not. That'll do it for Nightly Business Report. I'm Sue Herrera. Thanks for joining us.
And I'm Tyler Mathisen. Have a great evening, everybody. We'll hope to see you right back here tomorrow night.